What's going on, everybody? My name is Zach Hartley and welcome back to another weekly watch list video. In this one, I'm going to share with you all of my open positions, how I feel about the market conditions, and then what stocks I am watching in the week ahead. So without any further ado, let's jump right in. Okay, so here are all of my open positions. I currently hold on to Amazon, Coursera, and Datadog. I also have some options in Marathon Digital, and then I'm holding on to Tesla and Udemy. So far, all of them are doing pretty good. Marathon Digital is doing extremely well. I have already sold 1/3 of this position at 50% profit, so I have trimmed it a little bit, but I'm trying to let the rest of it run as far as possible. Now, when it comes to the NASDAQ, we are doing extremely well. It was a strong week. We broke out of previous resistance. We had a bit of a sell-off on Friday, but overall it was a good week. Same thing in the S&P 500. We broke through previous resistance. We did see a little bit of a sell-off on Friday, but with the Dow Jones, it's a little bit of a different story. We are getting some very hard rejection rate here around this sort of 34,000 mark. We've been rejected 3 times in the last basically 30 to 60 days right here, and it acted as a strong rejection point back in December of last year as well. So we just haven't been able to break through this point in about 7 or 8 months right now. So it's going to be very interesting to see what happens next week, because we are very, very close to that level right now. Now, when it comes to Bitcoin, we've got a lot going on here. It's been a volatile week. We've got a Bitcoin ETF that is trying to get approved. We've got the SEC that just lost a ruling on crypto to Ripple. And so there's a lot going on. We have the founder of Celsius that just got arrested for fraud. So there's a lot going on in the crypto markets right now. We saw a big run up, we saw a big sell off, and now we're trading right around that kind of just underneath $31,000 US mark right now. So it's going to be very interesting to see what happens next week. It has been a good basically 30 to 60 days for Bitcoin. Now, when it comes to the earnings this week, like I said, the banks are usually kind of the start of earnings season and then everybody else follows. We got a few more banks reporting this week and then everybody else is following. We've got Tesla and Netflix and then a bunch of airline companies reporting. We've also got TSMC, we've got American Express, and we've got a bunch of other companies that are going to be reporting earnings this week, next week, and a little bit the week after. So lots going on. It's going to be a busy little while here, and it's going to be very exciting. Now, when it comes to the market conditions, inflation came in at 3% in the US yesterday. That is a very good sign, but they do still have a very tight labor market with record low unemployment right now. In Canada, the Bank of Canada just raised interest rates to 5%, and they stated that strong employment was one of the main reasons why they increased the interest rates. And so with that in mind, it could be possible that the US, because of that strong inflation, will decide to increase interest rates. I believe at the end of the month is when they meet next. Now, earnings season. We're in the middle of earnings season like we just described, so get ready for that. The Bitcoin ETF is still in the works, and a lot of people are saying it's just a matter of time. There's 3 major companies right now that are trying to basically put together a Bitcoin ETF, and if that happens, it means that institutional money will attract some institutional money, and if that institutional money decides to buy this Bitcoin ETF, they would then be buying actual Bitcoin, which could drive up the price. And so there is an opportunity there. We also have this weird thing happening called a special rebalancing in the NASDAQ, where they're adjusting the weights of a couple of different companies here. And so that is going into effect on July 24th, but it is effective as of a date, I believe it was beginning of July, like July 3rd or 4th. And so really interesting dynamic here. If the major companies like Apple, Amazon, Tesla, Google, if they get rebalanced to a point where they make up less of the NASDAQ, then that means that all of the institutional investors that are trying to invest directly in the NASDAQ and match the NASDAQ may have to sell off some of their Apple, Amazon, Google, Tesla shares to become more in line with the NASDAQ. And when somebody sells off those shares, it means that the price could fall. And so this is something that has only happened twice in history. It is happening on July 24th, and it is something to keep in mind here. We also have existing home sales data that is going to be coming out on Thursday. So that is something that I am personally watching for, because the real estate market with these high interest rates just seems seems like we're pushing the regular consumer pretty far with regards to interest rates and what we expect them to pay. And if there's a correction, I want to be able to trade it. Now, last week I pointed out Alibaba. I think this is a company that has established a higher low, which is good here. They also have support at $80 here, and they have broken out of this bearish trend and started to trade above the moving average. So this is the chart that I showed you guys last week. This is what the chart looks like this week. They not only broke through the previous high, they have basically broke through two previous highs now, which is very nice to see. They're well above the moving averages, and they're starting to move higher. They did sell off a little bit on Friday, basically with the market. But we're starting to see some positive signs in Alibaba, and I just kind of wanted to repoint this out because we are seeing everything that we were looking for when I pointed it out to you last week in the watch list. Now, another company that I'm following and I am watching is EXPI, or EXP World Holdings. They're a real estate company breaking out to new kind of yearly highs. The company was way higher than this previously, but they have broken out of consolidation, and that's sort of the trend for this week, is stocks that were consolidating and now they are breaking out. EXPI is one of them. Datadog is another one of them. I showed you my portfolio at the beginning of this video, and I actually took a position in Datadog because of this breakout. So if you look at it, we had major consolidation, we retested support, and now we're breaking out to new highs. Here's the consolidation right here, and then we break out, we retest support right here, basically in June, and now we are breaking out here to new highs. Very, very exciting. Another company doing something very similar is Open Door Technologies. We have a bit of consolidation here. We have a breakout. We come back down. We didn't quite retest support in this one, but we came back down and now we are running to new highs. And the last one that I want to show you here is a little bit different. This one is Enbridge. Enbridge is really interesting here because they're coming down to a major level of support and they're still paying a 7% plus dividend. Now, whether or not that dividend is safe, that is something that you're going to have to research on your own. But historically, Enbridge has been able to maintain their dividend and they have been able to grow over time. Their top line revenue is also doing extremely well. So this is a company that I think deserves a deeper dive and could be a great value play, especially at these levels. Now, if you want to learn more about how to do that deep dive and a little bit more about how to execute these trades, definitely check out my stock market fundamentals course. You get the first month completely free when you sign up with Skillshare. It's kind of like the Netflix, but for courses. So instead of movies, you get unlimited access to every single course that's on the platform. I have 5 of them on there, and one of them is called Stock Market Fundamentals, and it has over 14,000 students, over 400 reviews, and over 2 million minutes of watch time. So I promise you, it is well worth the effort. It's well worth the time, and it's only 10 hours long, so you can do the entire course in a weekend if you wanted to. And without any further ado, that is it. So thank you guys so much for watching to the end of this video. If you get any value out of it, please remember to click that like and subscribe button. And if you want to see any of my trades, they are available in my Discord chat. The link is in the description to this video. Talk to you soon.